So good afternoon, everyone. Welcome back to one more session on financial management, session number 4. So my name is Maurya Hanspal, and here I'm gonna talk about and continue the sessions on the capital structure theories only. So the previous session we talked about that how to calculate your cost of debt in both the scenarios, be it your redeemable debt and the non redeemable debt or irredeemable debt. Like both the scenarios we talked about. Then we started our discussion on the preference shares. And again, we talked about the two types of preference shares, the redeemable preference shares and the irredeemable preference shares. So these two things we talked about in a very clear manner, right? अब हम preference shares को हमने समझा है कि what are the two types of preference shares, your irredeemable and non-redeemable or irredeemable. Now let's try to do some practical calculations on your irredeemable preference shares. You remember the formula for debt for the irredeemable debt, I 1 minus taxation by your net proceeds. Now cost of preference shares is denoted by KP. P is the underscript or the subscript. Your preferred dividend divided by your proceeds, because ultimately यहाँ पे you have your preferred dividend, है ना? Because अगर preference shares हैं तो dividend पे होगा, right? Question में अगर tax दिया हुआ तो into 1 plus tax कर देना, because वहाँ पे dividend distribution tax मिलता है. Dividends are not tax deductible. Dividend distribution tax pay करना पड़ता है. Okay. So let's try to PD में लिख देता हूँ, it's your preferred dividend. जो preference shares पे you are getting the dividend, it's your preferred dividend. Okay. That is the one scenario. And how to calculate the net proceeds we all know. Face value. Premium है तो plus premium we'll add. Discount है तो minus discount. Minus flotation cost. Now let's talk about a question. It says 15% preference shares have been issued having a face value of 100 rupees. Flotation cost is 4%. Calculate the cost of preference shares or the irredeemable preference shares. Preference dividend again calculated only on the face value. 15 हो जाएगा. Face value अब your net proceeds कितने आएंगे? 100 minus 4, because 4% of 100 is 4. 96. 15 by 96, it comes out to be 15.63% is the cost of preference shares. If question में tax would have been mentioned, you just would have to do 1 plus tax rate. 60% of the 1 plus 0.60, 30% 1 plus 0.30. That's the case of your irredeemable preference shares or the non-redeemable preference shares. Okay. Now the second thing comes for the redeemable preference shares or the redeemable preference shares. In this case, we know that the preference shares can be redeemed or will be redeemed after a certain period of time. Formula is almost same as debt. When we talked about the cost of debt, we had the formula what? Interest payment, 1 minus taxation plus your redemption value minus your net proceeds. This whole was divided by n. Thus this bracket. Whole this was divided by the redemption value plus your net proceeds by 2. Okay. Similarly, your cost of preference shares is nothing but your interest की जगह you will have your preferred dividend. अगर tax है into 1 plus tax कर देना, plus your face value or redemption value minus your net proceeds by number of years. Just this bracket would be divided by the number of years, not this whole. This whole will be divided by FV plus BO by 2. Okay, just look at this formula. Okay, so now we'll try to do one practical aspect. Okay. Let's erase this first. So now in the question they mention you what? Face value is 100. 15% is the preferred dividend. Okay. Same as question. Flotation cost is 4%. And time 10 years. The preference shares can be redeemed in 10 years. It says calculate the cost of preference shares. Net proceeds we know 100 minus 496. Preferred dividend is 15% of 100, 15. Tax question mentioned using the formula. Preferred dividend tax है नहीं तो 1 plus tax कर नहीं सकते plus your redemption value is 100 minus 96. Only this bracket divided by 10 divided by 100 plus 96 by 2. And once you solve it, you get 15.7%. So basically, you need to know when this cost of preference shares or your cost of debt or cost of equity is higher, it means it is more riskier. Okay, higher the cost of debt, higher the cost of preference share, higher the cost of equity, higher the cost of capital, the more risky that particular security is. Okay, that is one thing you need to understand and analyze. That is one scenario. अब ये हमारा हो गया है about cost of preference shares. Now let's go to the equity part. Cost of equity कैसे निकालते हैं? See, when you talk about equity, now there can be various methods to calculate cost of equity. The first method is just having your net profit, जो भी तुम्हारा EBIT आया है, इसमें से तुमने इंटरेस्ट माइनस करा है, टैक्स माइनस करा है, एंड आफ्टर दैट यू गॉट योर प्रॉफिट आफ्टर टैक्स डिवाइडेड बाय द वैल्यू ऑफ द इक्विटी. मतलब कंपनी में कितनी इक्विटी है. Okay, like you'll get your cost of equity. This is the first method. The second method by which you can calculate the cost of equity is your dividend. कितना पे करा है in the first year divided by your current share price year 0 मतलब 2020 की अगर हम बात कर रहे हैं 2021 plus your growth rate. And how to calculate D1? Nothing but जो D0 का dividend है 1 plus growth rate. That's it. The dividend will be given to you in the question for the current year. उससे तुम D1 निकालोगे for the future, for the next year. Growth rate will be given to you and this is the current. PO means current share price, year 0. Okay. So this is the basic thing and the cost of equity is denoted by KE. For example, question may they have given you the net profit is like 2 lakh rupees. If for example the question they give you net profit is like 2 lakh rupees. Equity the company has is like 40 lakh rupees. Okay. Cost of equity. और हाफ का भी हाफ मतलब सिंपली. तो बेसिकली तुम्हारी यही बात होगी. must be understood too. मतलब ये वैल्यू तुमको लाइक क्वेश्चन में दी होंगी. नेट प्रॉफिट विल बी गिवन टू यू एंड वैल्यू ऑफ इक्विटी विल बी गिवन टू यू. हो सकता है 20 लाख हो तो मतलब तुम्हारा मतलब कि 10% हो जाएगा. ये हुआ तो 5% हो गया. हाफ नहीं मतलब 5% हो गया बेसिकली. राइट. Similarly, they will give you the dividend in the question, like they might give you, is like 15, growth rate is 12%, current share price is like 168, calculate the cost of equity. अब इस डिविडेंड को पहले तुम्हें ग्रो करना पड़ेगा ग्रोथ रेट के हिसाब से. जब ग्रो करोगे तो 16.8 आ जाएगा. राइट. You have 16.8, current share price is 168 plus your growth rate is 15, and once you calculate this you will get your cost of equity. Okay. This is like one way. In some question, they say you to calculate the current market price of the share, or they say you to calculate the cost of equity only. देखो current market price तुम निकालोगे because like उस question में तुम्हें cost of equity दिया होगा. If in the question they also give you, they say you what? They say you to calculate the cost of equity. The best way I'm telling you, ये एक बहुत simple method होता है where you are not taking into consideration your KE. You're not taking into consideration your KE. But this method can be wrong in most of the scenarios. You have to consider your KE also. सिर्फ ये फॉर्मूला यूज करना उसके लिए मतलब कि D1 निकाल लिया, PO निकाल लिया, G निकाल लिया, उसके लिए फाइन है. But in the question they might also ask you to calculate your price दिया हो सकता. See, I'll go to the blank one. I'll tell that to you in a better way. Assume in the question they gave you, if you want to calculate basically the future rate of like cash flows, or like you want to calculate the future growth rate of dividends. So for that you have a formula which takes into consideration the cost of equity also. FCF is free cash flow मान के चलो into your 1 plus growth rate divided by your cost of equity minus D. ये तुम्हें consideration में लेना पड़ेगा ये denominator, and this cost of equity must be greater than your growth rate. Okay, and that thing you need to see while you are doing it. Question में, let's read the question. It says that ABC Limited is a company. Question से ज़्यादा अच्छे समझ आएगा. Dividend rate is 15%. Equity share की value is 100. Face value is given as 100, and this is a dividend of 15%. The expected growth rate of dividend is given as 12%. This is the expected growth rate of dividend. अब वो बोल रहा है फाइंड आउट द कॉस्ट ऑफ इक्विटी शेयर्स गिवन द प्रेजेंट वैल्यू ऑफ द शेयर, मतलब पीओ दिया हुआ है, प्रेजेंट वैल्यू ऑफ शेयर 168 है. अब वो बोल रहा है कॉस्ट ऑफ इक्विटी निकालो. ठीक है. अब अगर तुम्हें डिविडेंड की वैल्यू दी हुई है, इन दैट केस यू कैन यूज अ सिंपल बेसिक फॉर्मूला. इफ D1 वैल्यू इज गिवन टू यू, D1 by PO plus D. But if D1 is not given to you and you also have to calculate the D1, in that case you'll have to use this formula to calculate the price of the share. Now this price has been given to you as 168. डिविडेंड 15% का, ग्रोथ रेट हो रही है 12% से. K is given to you as 12%. K is 12%. Let's see. नहीं, K we have to find out. Minus 0.1. Just interchange the formula. Cross multiplication. And once we do it, we get the K as 22%. Once we do it, we get the K as 22%. This is the one thing that you can go for. Here you can, and this formula can be used to calculate the future growth rate of dividends, your cash flows, and this has been derived. And this method is called your perpetual method भी इसे हम बोलते हैं. Yeah, we call it as a perpetual method also. Okay. Now the most important method, like which is being used classically to calculate the cost of equity, call it as the CAPM model. Capital Asset Pricing Model. So before understanding your capital asset pricing model, let's try to understand the two types of risks. One type of risk is called your systematic risk. It is also called your non-diversifiable risk. And the other type of risk is called your unsystematic or non-systematic risk. And it's also called your diversifiable risk. So first let's talk about the unsystematic risk or diversifiable risk. It means that this risk can be diversified away. And how this risk can be diversified away? By creating a portfolio. Let me give you a simple example. So just assume if before this COVID-19 pandemic, if anyone had invested only like into the stocks of the hospitality sectors, your travel tourism industries, your restaurant industries, your hotel companies and all that stuff, his portfolio would have turned into negative and would be entirely zero. Khatam ho chuka hota. But if instead of just investing into the hospitality sector, that person would have invested also into the pharma sector, that did very well because ultimately everyone was dependent upon the pharma sector. IT sector because everything went online. But fast moving consumer goods because again these are non-discretionary items and the demand cannot go down. People would be demanding your groceries and all those stuff. And after some time, your metal industry started to boom, your capital goods industry, consumer goods, your real estate, all these industries started to boom. So if along with these companies of the hospitality industry, if a person would have these other sectors as well, his portfolio would have balanced out and he would still be in profitability, right? So if it's a risk that can be diversified away by creating a portfolio. This risk can be diversified away by creating a portfolio, which helps you to have diversification. So see, investing into the stocks from your hospitality sector is also a kind of diversification. But there you are not realizing the true meaning of diversification. That's a concentrated diversification within the sector. And diversifying within the sector is completely bad. You should diversify across the sector and not within the sectors. For example, if I told you like about this sector for like hospitality. Again, you have some portfolios, some mutual funds of banking companies only. Now, banking companies are somewhat they're high beta industries. अभी beta हम बात करेंगे. They are the more kind of risky industries we can say, right? So अब ये industries risky हैं. तो अगर सिर्फ तुम बैंक कंपनीज में कर रहे हो इन्वेस्ट, अगेन यू माइट इनकर अ लॉस एट अ फेस व्हेन these banking companies are not doing well, right? Like instead of like diversifying or having a concentrated diversification and investing within the sectors, it is advisable to diversify across sectors. But unsystematic risk or diversifiable risk is also called your relevant risk. It's also called your unique risk. It's also called your idiosyncratic risk. Now let's come back to systematic risk or non-diversifiable risk. It's also called your market risk. ये जो हमारा जो पहले वाला रिस्क था, दिस इज अनसिस्टमैटिक एंड डाइवर्सिफाइबल. इट्स आल्सो कॉल्ड योर कंपनी स्पेसिफिक रिस्क वी कैन से, और इंडस्ट्री स्पेसिफिक रिस्क आल्सो. Or systematic risk is a market risk. Even the creation of the portfolio and following the strategies of diversification cannot help you out because these include your market risk, like for example, some interest rate volatility, like COVID-19 pandemic, some cyclone, some drought, like Russia-Ukraine crisis. So all these things came into place, which cannot be controlled even by creating a portfolio because that would ultimately impact each and every sector of the market, right? Which are unpredictable also, which cannot be diversified. So a portfolio, when you have a portfolio, it will not have the unsystematic risk or the kind of diversifiable risk. But a portfolio will always have a systematic risk or non-diversifiable risk. So how do we denote your unsystematic risk or diversifiable risk? It is denoted by the standard deviation or the variance of the error term. Standard deviation or variance, it shows the risk. Higher the standard deviation, higher the variance, the more risky is your stock. Okay. So it's standard deviation is nothing but your square root of variance, and variance is nothing but your square of standard deviation. So it is denoted by your error term. Error, and I is your stock or security. Your non-diversifiable risk or systematic risk or market risk is denoted by beta. Beta is a proxy for systematic risk. Okay, so once you add the beta, the value and this value, like you people get the total risk. So total risk is nothing but, मैं total अब लिख देता हूँ, is nothing but your systematic risk plus your unsystematic risk, and it is denoted by the standard deviation. Total standard deviation includes your systematic risk, which is represented by beta, which is also called your non-diversifiable risk or the market risk, plus your standard deviation of the error term. अब बीटा को भी like we have to modify. हम सिर्फ बीटा को like हम इसमें ऐड नहीं कर सकते. You have to regress the beta against the market index because ultimately it's your market risk. तो market का beta लेना पड़ेगा. That's something that we talk about in like kind of the kind of regression models and Sharpe's model. वो हम बाद में बात करेंगे. But as for now, just take into consideration the summation of your systematic and non-systematic risk is your total risk. अब याद करने का तरीका, सिस्टमैटिक याद है तो इसका उल्टा इज योर अनडाइवर्सिफेबल और मतलब कि नॉन डाइवर्सिफेबल एंड मीन द सेम थिंग. अनसिस्टमैटिक दिया हुआ इट मीन्स इट इज द डाइवर्सिफेबल रिस्क. तो इस तरीके से यू पीपल कैन रिमेंबर इट. नाउ लाइक इफ वी टॉक अबाउट बीटा, नाउ बीटा कैन बी ऑफ थ्री टाइप्स. You can have a beta of greater than 1. You can have a beta of is equal to 1. I'll just remove this and write it in a better way. Yeah. Now beta you can have is equal to 1. Beta can be like greater than 1 and less than 1. So when it's a greater than 1, it's an aggressive stock. And by aggressive stock, I mean which rises more or falls more than the Nifty. For example, if the beta is 1.5, it means if Nifty or Sensex, the market index rises by 10%, the stock will rise by 15%. In that case, it's good. But if the Sensex or Nifty falls by 10%, the stock will fall by 15%. In that case, it can be bad. So it is reacting more as compared to market. In case of less than 1, we call it as a defensive stock. It means अगर बीटा मान लो 0.5 आ रहा है, ठीक है, मतलब कि 1 से कम है. So if your Sensex or Nifty is rising by 10%, okay, it will rise by a lesser amount, by just 5%. Okay, and if in that case it might be wrong because market ज़्यादा return दे रही है and तुम्हारे stocks कम दे रहे हैं. But if the stocks are falling by 10%, if the market is falling by 10%, be it Sensex or Nifty, or stocks will fall by less than 10%. In that case, it's fine. Beta of the market is equal to 1. ये Sensex and Nifty का beta होता है is equal to 1. So that is the major difference between aggressive and defensive stocks. Both have their own advantages and disadvantages. Okay. So coming back to the CAPM model now. Capital asset pricing model. It says your cost of equity is nothing but your RF plus beta. RM minus RF ये formula है. RF is your risk-free rate. Now, what is the risk-free rate? Which you get on government securities, your treasury bills, treasury notes, treasury bonds. Because this is risk-free, because the government won't be defaulting upon their interest obligations. Because if the government is defaulting upon their interest payments, the people will lose faith in the country, as well as a large number of the foreign institutional investors also invest into government securities. तो उनका भी एक ट्रस्ट, एक फेथ इंडियन मार्केट से उठ जाए. Now the question arises, like which kind of risk-free rate to use here? T-bills, T-bonds, T-notes. It depends upon your time horizon. If you are taking the stock data, the market data for 1 year, then take RF for 1 year. Agar like if you are taking for 10 years, take note ka data. If you are taking for more than 10 years, take bonds ka data. Right? Beta we know, a proxy for systematic risk. RM is the return on market. Means index से कितना मतलब कि कितना तुमको रिटर्न मिल रहा है. Bet your Sensex or Nifty, and RF is again your risk-free rate, and K is the cost of equity. And the difference between your RM and RF, इस point का difference सिर्फ RM and RF beta को exclude करके is called your market risk premium. Higher the market risk premium, it means the more risk you have taken, because ultimately why are you investing in market and not in RF? The main concern for you for investing into the market is that you will get higher return. That is why in the equation you have the return on market pehle and RF baad mein. You are subtracting RF from RM because it is the excess risk that you are taking for excess return. So it is nothing but the excess risk that you are taking to get that premium, and premium is nothing but your return. That is what's RM minus RF. Now there can also be certain situations like COVID-19 pandemic and various other kinds of recession when the RM can be less than RF. RM will be less than RF. ये हो सकता है. In that case, your cost of equity will be negative. मतलब कि मार्केट ने कोई रिटर्न दिया ही नहीं. ठीक है. बट आइडियली ये पॉसिबल बहुत ही रेयर सिनारियोज में होता है. योर कॉस्ट ऑफ इक्विटी कैन नेवर बी नेगेटिव. बहुत ही मतलब 0.1 सिनारियोज में, बट नहीं होगा. बिकॉज अल्टीमेटली अगर तो मार्केट में इन्वेस्ट करो तो यू आर टेकिंग मोर रिस्क एंड लाइक बेसिकली लाइक गेटिंग मोर रिटर्न. The question like what they will give you, like they might give you that the risk-free rate is 6%, beta is 1, RM is 15, RF is 6. Calculate the cost of equity. 15 minus 6 is 9, and 9 plus 6 is again 15%. Like these values would be given to you in the question. The risk-free rate is 6, your beta is 1, your RM. Either they can also say you that the market risk premium is 9%. Sometimes in the question, they directly mention you and they see that the market risk premium is given as 9%. And then people get confused कि हमें RF की वैल्यू सिर्फ दी हुई है एंड मतलब कि RM की वैल्यू नहीं दी, then how to calculate it. तुम्हें ये ब्रैकेट की वैल्यू दे दी है सीधा, so it is easier to calculate. ठीक है. Now, like when we talk about the CAPA model, like there are some further assumptions about the CAPA model, like a few assumptions that a student of finance must know about the CAPA model. So, like we'll be talking about the assumptions in the next session because it is all for today.